India witnessed a remarkable surge in income tax returns filed for the assessment year 2024 to 2025. Over 91 million taxpayers filed their returns, marking a significant increase from previous years. This surge is a testament to the government's efforts to broaden the tax base and foster a culture of compliance. The increase in tax filings can be attributed to several factors. These include increased digitalization, simplified tax procedures, and heightened awareness campaigns. The government's push for digital transactions has also played a crucial role in enhancing transparency and accountability. This upward trend in tax filings reflects a positive shift in India's economic landscape. It underscores the growing trust in the tax system and the government's commitment to fiscal responsibility. India's personal income tax system operates on a slab-based structure, ensuring that individuals are taxed progressively based on their income levels. This means that as your income increases, the rate at which you are taxed also increases, making it a fair system that aims to reduce the burden on lower-income earners while ensuring that higher-income earners contribute more. For the financial year 2024 to 2025, the government introduced revised tax slabs, aiming to provide relief to taxpayers and boost disposable income. These changes are part of a broader effort to stimulate economic growth by putting more money into the hands of consumers. Under the new regime, individuals with an annual income up to 3 lakh rupees are exempt from paying income tax. This exemption is designed to benefit those in the lower income bracket, ensuring they have more disposable income for their daily needs and savings. For those earning between 3 lakh and 7 lakh rupees, a nominal tax rate of 5% is applicable. This lower rate is intended to provide a smooth transition for middle-income earners, helping them manage their finances more effectively. The tax rates gradually increase with higher income brackets, ensuring a fair and equitable tax structure. This progressive system is designed to ensure that those who have the ability to pay more do so, contributing to the overall development of the country. In addition to the basic tax rates, various deductions and exemptions are available to taxpayers, further reducing their tax liabilities. These deductions can include expenses related to health, education, and investments, making it easier for taxpayers to manage their financial responsibilities. These provisions aim to encourage savings, investments, and social security contributions. By offering these incentives, the government hopes to promote financial stability and long-term economic growth, benefiting both individuals and the nation as a whole. India's corporate tax structure is designed to promote business growth and attract investments. For domestic companies, the corporate tax rate is determined based on their annual turnover. Companies with a turnover of up to 400 crore rupees benefit from a lower tax rate of 25%. For companies with a turnover exceeding 400 crore rupees, a standard corporate tax rate of 30% is applicable. This differentiated approach aims to provide a level playing field for businesses of all sizes and encourage the growth of small and medium enterprises. The government has undertaken various measures to simplify the corporate tax structure and reduce compliance burdens. These reforms aim to create a conducive business environment and attract foreign direct investment. The Goods and Services Tax, or GST, implemented in 2017, marked a transformative reform in India's indirect tax system. It subsumed a complex web of central and state taxes, creating a unified national market. GST is a destination-based consumption tax levied on the supply of goods and services. It operates on a multi-slab structure, with rates ranging from 0% to 28%. Essential items such as food grains, fruits and vegetables are exempt from GST, while luxury goods and services attract higher rates. The GST system has significantly eased the compliance burden on businesses, reduced cascading taxes, and fostered transparency in the supply chain. Section 5. A trillion rupee tax collection, fueling India's growth. India's tax collections have witnessed substantial growth in recent years, reflecting the country's robust economic expansion and improved tax compliance. This surge in tax revenue is a testament to the government's efforts in widening the tax net and ensuring that more citizens and businesses contribute their fair share. The increased revenue is not just a number, it represents the collective effort of millions of taxpayers who are now more aware and compliant with their tax obligations. In the fiscal year 2024 to 2025, the government collected over 8.74 lakh crore rupees in personal income tax, highlighting the increasing tax base and rising incomes. This significant collection is indicative of a growing middle class and higher disposable incomes, which in turn fuel consumption and economic activity. Corporate tax collections reached 7.68 lakh crore rupees, indicating the healthy performance of the corporate sector and the impact of tax reforms. These reforms have simplified the tax structure, making it easier for businesses to comply and contribute to the national exchequer. GST collections soared to an impressive 1.77 lakh crore rupees, underscoring the success of the GST regime in streamlining indirect taxation. The GST has unified the market, reduced tax evasion, and increased transparency, benefiting both the government and the business community. These robust tax collections provide the government with the necessary resources to invest in infrastructure development, social welfare programs, and other crucial sectors, driving economic growth and improving living standards. The funds are channeled into building roads, bridges, and public facilities, as well as enhancing healthcare and education, ensuring a better quality of life for all citizens. Section 6. The Middle Class Squeeze, Economic Pressures and Challenges. While India's economy has made significant strides, the country's middle class faces various economic challenges. Slow wage growth, coupled with rising inflation and high costs of living, has put a strain on household budgets. The rising costs of education, healthcare, and housing have further added to the financial burden on the middle class. Job insecurity and unemployment, particularly among the youth, remain areas of concern. The government recognizes the challenges faced by the middle class and has implemented several measures to address their concerns and improve their economic well-being. Section 7. Government intervention, tax breaks, and support measures. The Indian government has introduced a range of initiatives aimed at supporting the middle class and alleviating their economic burden. These measures are part of a broader strategy to stimulate economic growth and ensure financial stability for millions of families across the nation. These include tax reforms, subsidies, and social welfare programs designed to enhance their disposable income and improve their quality of life. By revising tax policies, the government aims to make the tax system more equitable and less burdensome for middle-income earners. Tax slabs have been revised to provide relief to middle-income earners, making it easier for them to manage their finances and save for the future. This revision is expected to have a significant positive impact on household budgets. While deductions and exemptions for housing loans, education expenses, and healthcare costs have been enhanced. These changes are designed to reduce the financial strain on families and help them invest in essential areas of their lives. And healthcare costs have been enhanced. This means that families can now afford better education for their children, improved healthcare services, and more secure housing options. Subsidies on essential commodities such as cooking gas and fuel have been introduced to mitigate the impact of rising prices. These subsidies are crucial in ensuring that basic necessities remain affordable for the average household. Furthermore, the government has focused on creating employment opportunities through initiatives such as Make in India and Skill India, which are designed to foster economic development and reduce unemployment rates, aiming to boost manufacturing and enhance the skills of the workforce. These programs are not only about job creation, but also about empowering individuals with the skills needed to thrive in a competitive job market. Section 8. Looking ahead. India's middle class on the rise. Despite the challenges, the future of India's middle class appears promising. With a young and aspiring population, a growing economy, and supportive government policies, the middle class is expected to witness significant growth in the coming years. India is projected to become the world's third largest economy by 2047, driven by robust domestic demand and a thriving services sector. This economic expansion is likely to create new opportunities, boost incomes, and elevate the living standards of the middle class. The government's focus on infrastructure development, education, and skill development is expected to further empower the middle class and enable them to contribute meaningfully to India's growth story. Section 9. Conclusion: a brighter future for India. India's journey towards economic prosperity is intrinsically linked to the well-being of its middle class. The surge in income tax filings, coupled with robust tax collections, highlights the country's economic resilience and the growing contribution of its citizens. While the middle class faces economic challenges, the government's proactive measures to provide tax relief, offer subsidies, and create employment opportunities demonstrate its commitment to their welfare. With a positive outlook for economic growth and a supportive policy environment, India's middle class is poised for a brighter future. As India continues its upward trajectory, the middle class will play a pivotal role in shaping the nation's destiny, driving consumption, innovation, and inclusive growth.